What is up, everyone? A Weiss rating that hints at a $70,000 Bitcoin and stablecoin buying power at an all-time high. Is it the perfect confluence? All happening at once. Is it too good to be true? We will discuss in this video. What's up, everyone? Thank you so much for cruising by Crypto Capital Venture. Hit the subscribe if you're not a subscriber. Hit the like button on the way in and turn the notification bells on. I try and give you that quality Bitcoin content. I've been getting a little tired of some YouTube videos out there covering the same thing. As Bitcoin price trades sideways, I can't do it, but there are some very interesting things on the charts and some bits of Bitcoin news that are confluent, bullishly confluent with those charts. So let's jump in. High stablecoin buying power could predict Bitcoin's next bull run. Bitcoin's next bull run. Let's face it, that is what you and I are waiting for. We're just out here looking for hints when that's going to happen, or if it's even going to happen. Today, stablecoins buy 15 times as much Bitcoin as in early 2018. This could bode well for the next bull run if and when it happens. Glassnode keeps track of the stablecoin supply ratio, or SSR, which is calculated by dividing Bitcoin's market cap by the market capitalization of all major stablecoins. Low SSR indicates that stablecoins have more buying power, which the company asserts could be interpreted as a bullish sign. So the ratio has two components. Which is to blame for the drastic change? That's the question that they're posing here. So looking at the Bitcoin chart, it becomes very clear that the radical change is mostly due to the growth of stable coins. Here we go. This is what I wanted to talk about. The market capitalization of Bitcoin at the time was $195 billion. Currently, it stands at $171 billion. So that represents a decrease of 12%. Meanwhile, the cap for stablecoins has increased from $2.2 billion to $11 billion, or 500% growth. Stablecoins represent a convenience vehicle for traders and investors. It allows them to park their crypto assets in stable assets without the need to cash out and exit the crypto ecosystem. If you're watching this video right now, I know I'm going to get comments of people saying, Dan, it doesn't matter. It's $11 billion in stablecoins. I want you to comment below what you really think of this and if this is a bullish sign, as this article talks about. And if you disagree, tell me why in the comments below. I really want to know. Whether the growth of stablecoins will transform into the next bull run remains to be seen. I think it's going to take a little bit more than $11 billion in stablecoins to bring us to the next bull run. And it continues, if and when this run happens, a majority of the stablecoin space should provide more efficient mechanisms for market participants. Now that, I agree. So here's the other piece of news. This is bullish. Ferocious rally. Weiss ratings bullish on Bitcoin price to hit $70,000 next year. Many people bullish on $100,000 plus, but here we go. Let's talk about this. Weiss ratings has outlined key reasons why investors should be bullish about Bitcoin, seeing a ferocious rally with the price of the cryptocurrency expected to hit $70,000 next year. I love everybody's predictions. Everybody has a prediction out there. 50,000, 100,000, 150,000, a million. Believe it or not, there's people that are in the $1 million Bitcoin club for the very short term, which I think is crazy. In addition, the Federal Reserve's massive money printing and institutional investments into cryptocurrencies add to the bullishness. One of the three key reasons why the analysts are bullish about Bitcoin stems from a price prediction based on the stock to flow analysis. I don't even need to cover that. There's so many YouTube videos about stock to flow. The popular forecasting model now points to a ferocious rally over the next 12 months or so. They wrote, we know that if this next bull cycle is harmonious with the previous bull cycles after the last halvings, that Bitcoin is getting very, very close within 12 months of this happening. And yes, it is identified on the stock to flow, and you can see it. The stock to flow forecast based on previous stock to flow happenings. So, and you can see on this little picture, they've identified the first halving, the second halving, and the third halving on this chart. The analysts added that previous stock to flow predictions line up quite well with Bitcoin's actual price performance. And do the charts ever line up quite well? They do. There is so much synergy on the Bitcoin charts, and we're going to look at that in just a second here. The other two reasons that were highlighted are quantitative easing infinity and institutional money flowing into cryptocurrencies. Those are two very big things. The COVID-19 pandemic environment has pushed the Federal Reserve to print $2.9 trillion in new paper money in just 13 weeks. It's absolutely insane. You know what's happening, everybody. You know what's happening. By any measure, this is corruption of money on an industrial scale. They exclaimed, predicting that investors will pour money into Bitcoin and gold as a safe haven when they lose confidence in paper money. How haven't they lost so much confidence in paper money? So all of this happening and a lot more, everybody. There's a lot more news happening. And then we see this. This is the volatility S&P 500 index, or the fear index. Just for reference, real quick, back here, this was 2008. You know, going into that 2008, 2009 bear market, the traditional markets went into, you remember it, the housing crash. It was terrible, right? When that happened, right, you can see the fear, right? The increase in fear, and it's identified on this chart right here. It was like an all-time high up here around 95. It was a lot of fear in the markets. And when COVID happened, we had this similar spike almost to the exact same area. And when we were up here, we talked about that area. We talked about traditional markets and fear leveling off, coming back down, and what that might look like. And we're starting to get a sense of what that looks like. It's trickling back down. And I do believe that's going to continue. There's going to be continued consolidation on these charts, or better put, consolidation on human fear spreading throughout this country. I do believe that's going to decrease. That is one thing to continue to keep an eye on, because I do believe that there is something to be said for data happening in traditional markets and that translating over to cryptocurrency markets. Humans are behind both things, right? And it's people's money that are either coming into the markets or not coming into the markets. So that's a very important chart we need to keep an eye on. Two things I just want to point out. This is a macro level. I'm not going to jump too much into price, but one thing is this. This was a 2016 halving back here. We know that Bitcoin, after that halving, took a big dip. This is the daily. We dipped down to the 200 moving average on the daily chart. And that's important to note and just remember. And if we go to the weekly, we can also see Bitcoin actually dip down just above the 50-week moving average over here on the weekly chart. Another very important thing to take note of. Because if we're looking at Bitcoin halving and what has happened recently, this last halving, you can see Bitcoin on the weekly above the 50-week moving average. It's a very important thing to take note of. It's a very important thing to keep an eye on, because that is exactly what Bitcoin did after the last halving. We know the 50-week moving average is an incredibly strong area of support for Bitcoin, and an important area in terms of identifying the separation between bear market and bull market. We know in the bear market, we were just below that 50-week moving average, and then we broke back above. Now, we might be slightly higher than the 50-week moving average if COVID didn't hit right here, and that threw off Bitcoin charts. So we never will know what Bitcoin charts would look like right now, or what the price would look like if COVID never happens. Now, if we go to the 6-hour chart, this is where we are. Bitcoin, it looks like a lot of volatility, and there's some volatility in there, breaking above $10,000 briefly, but Bitcoin has been very much trading sideways since the beginning of May or so, and we're getting to the apex of a couple patterns here, an ascending triangle that you see on the screen right here, and a symmetrical triangle currently 69% of the way to the apex, this larger symmetrical triangle. We know based on Bukowski, he talks about from his data 73% of the way to the apex is that typical breakout area, and we are getting close. We're going to keep an eye on that. This isn't going to be so much a technical analysis video as much as I wanted to discuss where Bitcoin is from a macro level, and it's very synergistic with what we're just covering in those articles to what Bitcoin is doing now compared to what it did after the last hit, like Bitcoin halving. And you can see we're consolidating and rising potentially back above into a bull market. Will this continue, right? If we look at the weekly chart here, will this continue? This is what it might look like if it does continue. This was speculative based on if Bitcoin broke out of some of these bullish triangles, what Bitcoin would look like. Potentially $20,000 Bitcoin by September. That's a different video. Let me know your thoughts below. Are you bullish on Bitcoin? And yes, I mean in the short to mid-term, not just the long term, because I know many people are bullish long term, but in the short term, what are you feeling? Bearish, bullish? Let me know in the comments below. I appreciate you coming by again. Subscribe if you're not a subscriber. Hit that like button because it means a lot to me, and turn those notification bells on. I will see you all in the next video. Have an awesome day, and God bless.